as home sellers and buyers wait on a Fed cut, here's how mortgage rates have impacted the spring housing market. It's pretty short here, but it really is that buyers and sellers are kind of on the fence in some cases, and they're either really on the fence or really going for it. They're like reckless abandon. I don't care what rates are doing. I don't care what I got to sell. I got to do whatever. Yeah. Being driven by like conditions or life, whatever. And then you have the really sit and wait people. Yeah. It's like these really two polar opposite tribes right now.
Yeah.
Is that a pretty accurate description?
Well, no, it really is, because, I mean, you got people who they understand the want or the need, or are just being very realistic, right? There's some, but then there's other ones that just, they just don't want to get it. They think that everything should be their way, right? And so one of the things is, I'll just wait until I see the Fed funds rate, interest rates get cut, and et cetera. But I think the people who are getting into it, me being that I buy properties even in this market right now, investment wise, I think they're doing the right thing.
Yeah,
they're doing the right thing. You know, we're a very dense city here in San Diego, and I mean, I love where we're at. I love everything about it, and you know, we continue going that we're strict on what we're able and capable of building. So buy something. Put your stamp of approval here in the ground.
One of the things that was mentioned in the article is that one of the biggest caveats this spring is really the volatility. Yeah. You know, volatility of rates. I mean, you could be 6.5 2 weeks ago and 7.5 next week, and that's a big swing. A 1% swing in any like 30-day, 60-day period is pretty substantial for most people looking to buy a home and who need a loan. So that comment actually comes from the senior economist at Zillow. Yeah. But my point here was that it's actually for both sides. That's volatile for the sellers as well and for the buyers. The rates going up, less buyers. For the buyers, it might give you a greater chance because less competition. On the seller side, you may have less choices. Yeah, I don't think pricing is going to be an issue here in San Diego because of that. But it really is the volatility on both sides of the deal. It's not just for one, not the other. Because again, in most cases, that seller is selling that house, and they're immediately the buyer the next day out looking for the next home and trying to get qualified and all that kind of thing.
And again, all this information depends on where you're at, what part of the country you're at, right? Like it's here in California, I always say get in. And it's not just because it's my business, it's because I see what it's done since I purchased properties.
You're doing it. It's different if you're sitting up here trying to sell everybody a loan.
No, correct.
You're saying I already own, I own this one, and I own that one, and I'm buying that one, and I'm building that one. And
correct.
You're doing all those things. That's way different. The congruency is not missing versus someone else just talking about doing it in theory and isn't doing it.
And I mean, again, and there's always the risk, right? There's a lot of risk factors in everything. Not just because I buy it, I mean that, hey, there's no risk tolerance. There always is. But you have to really identify how are you going to minimize that risk? You know, what's your exit strategy when you go into it? How are you going to be able to make the payments? And then if you bought this and it's vacant for a month, 2 months, where are you at? You have to have this war chest of savings for that. Like these are things that we do on a day in, day out basis. When not just myself, but I speak with other investors of what they're doing, and that's who I'm learning from as well. You know, so.
Do you agree? I mean, is the volatility an issue?
Yes.
Is that a bigger issue than inventory and prices even? Because inventory is paltry and, well, I mean, inventory is coming back, but not like robustly, and prices are what they are. So is the volatility of the rate kind of the biggest issue of those three?
You know, I would say so. It will be for a home buyer. It will be, because if they can't afford it, it just keeps them out, it just puts them out of that range, right? So 0.25%, 1/8% increase, that may be a $20,000, $30,000 less that they can qualify for.
Yeah, right.
And depending on what market you're in, the volatility in that rate is very, very, can
it's
affect
impactful.
them.
Well, and
it's
sometimes
impactful,
that's the difference of being able to compete with the next buyer or not.
Correct.
That $20,000 or $30,000 in a market where maybe houses are $500,000. That makes a difference.
And that's correct. Like we have a client right now in Bonita, right? The house is in Bonita, $995,000 to $1,025,000. Okay. My client put an offer in for $1,225,000. So $200,000 higher than what's being asked for.
Than the list price.
The agent already came out. We already have some north of 2.2.5.
Wait.
Right?
Wait. What?
Yes.
So ease the numbers. It's about $1 million listing.
Yes.
Your client went in at 1.25.
Correct.
You're saying they got an offer for $2 million?
No, 1.2.
Oh, got it.
1.2.5. They're higher than the 1.2.5.
Oh, got it.
So my client is right now teetering where in order to go in there, I have to beat that 2.25. So I got to go in there at least almost like at 3, Well, his income right now and with the rates when I qualified him have changed by 0.5% because now we're in the jumbo.
Yeah.
That's about a $50,000-$70,000 difference.
Oh
that's
God.
now needed more of a down payment.
That's
He is still in his
crazy.
condo in downtown, but these are the kind of things that we do deal with in the volatility of the rate. You know, so if we see that rate go down, that's perfect. It helps us out. It gets us in there. Now we can compete. But in this
Do a little
case,
breathing room.
it just kind of puts them like, yo, do you really want a $9,000 monthly payment?
Oh my God. 9,000
Right?
bucks.
Yeah. Yeah.
Oh, that just sounds painful.
No, it is painful.
Yeah.
It is. So going back to, yes, it matters. Those things do have a huge effect. Just the slightest uptick in the rate right now is just going to, it's going to affect us.
So earlier in the show, you were talking about kind of like the new normal. And, you know, this spring does not feel normal compared to a 19-year history of what we'd call normal.
Yeah.
Do you think that this spring is normal in the last 2 to 3 years?
No, not
Do you
at
think
all.
this? Okay, so do you think that this spring now is what might be normal for the next 2 to 3 years?
I believe that.
Possible. Okay.
Yeah, I believe that because I don't see inventory going into the millions where originally we're at.
Yeah.
You know, in any given month. I don't see that happening anytime soon.
Yeah.
You know, especially if rates start going down, Andy, it's just going to be an influx of buyers going in because now they're able to qualify, right? Now they're able to go in. There's going to be more competition once again.
Yes.
You know, and now we're going to have all the people from San Francisco coming to San Diego because we're cheap to them, right?
Right,
You know?
right. Yeah.
So it's things like that. So I think it's like a catch-22.
Yeah. Well, I do too. I was curious to get your opinion on it just because, you know, we throw around this term new normal and new normal, but then things change. Like, oh, this changed, that changed. Is that normal? Is this the new normal? Was what next going to be normal? And I think that we are staring down whatever this looks like now. And I'll say March, April, May, June. I'm going to gather all those months and say whatever this does now is probably what we're looking like in 2025, 26.
Yeah,
even.
I think the government's even shocked with everything that's going on because normally when we see higher interest rates, that's when we see more inventory come up.
But it's not happening.
And it's gradually, yes.
Well,
we're
it's
still better
not spiking.
than last year this time around. It was like at 32%.
Yeah.
More homes available,
Yeah.
which is good. But then we have 22 to compare, right?
Yeah.
Because 22 was just a horrible time of homes on the market. It was one of the lowest we've seen.
Yeah.
And so I just feel like, if we
Like
continue to see.
it looks good on paper, but it's not really representative of what's still needed.
Exactly.
Yeah.
So if we still see that, obviously you're going to see an increase in home prices because of the shortage. We need to get more homes so we can kind of start seeing that balance of home prices going down, if you will.
Yeah. I think that sellers are really in the driver's seat.
Yeah.
I think it's obvious. Buyers are going to have to work their butt off to get qualified. They're going to have to work their butt off to outcompete the next buyer or bidder, if you will, on places that are being multiple bidded up. And I think that what we're seeing right now in this spring of 24 is likely to be what it's going to look like for the next, I'll say 12 to 18 months for sure.
Yeah, exactly.
In my opinion. You know, we'll go back again, we'll look back and see if this is right or wrong, but I just think that where we're at now is kind of where we're going to stay. I don't see on the horizon a mass like tsunami of inventory showing up. I don't see massive rate price or rate cuts happening. I don't see prices plummeting off the cliff. None of those are impending. Any of those variables I just mentioned don't have like an impending doom asterisk to it that would completely change the course.
No, I think our community's getting better. They're asking better questions than before. Before it was like, get me in, just boom. Now I think the community, they're doing a better job by paying more attention to what's going on to their finances, to what's going on in the media.
It's like a prerequisite, though. Now
It really is.
It's not
it
like
really is.
You can't afford to be like disconnected to your finances, and then I'm just qualified. No. You're making pretty good money right now if you're qualifying. Number one. Number two, that brings a different type of behavior when it comes to that person typically. And then number three, your savviness is definitely dialed up a lot. That's a great point. That's a great point.
I like it. They're understanding the uncertainty of the market conditions now. Like they're asking the right questions. Like they're even asking us, like, what would you do? And then we have to pencil it out for them. Mm-hmm. Will this work for you? Mm-hmm. And if it works for them, that's when like, okay, I understand. Now I know where my max is.
Yeah.
Now I know where the ceiling's at, right?
That's a good point. Yeah.
So I like that people are really paying attention to these their situations and not just kind of going and just, hey, making a decision just based off let's go.
Yeah. No, that's
impulsive.
a fantastic point, Memo. Thank you for saying that. I mean, I think that is probably going overlooked a lot. So I'm glad you mentioned that.
No, it was a lot easier just because, hey, before I think it was like, well, my cousin bought a house, she did it,
Sure.
why, and so it's crazy how everything just kind of changes as the years progress, right? But we have all this information, we have the TikTokers, we have all these social media platforms that just give you that more power of knowledge of asking the right questions.
Like, hey, my cousin ain't that smart, and he bought a house, so I think I could buy one.
Exactly.
It takes a lot, cause oh God, it's been fun being related to you for all this time. My dumb cousin bought a house, I can do it too.
Sorry.